So things that have already changed and are impacting current claims for R&D tax credits is the rate of relief. So SMEs have seen a reduction in the enhanced deduction available to them, whereas those large companies that fall within the RDEC scheme have actually seen an increase in the credit available. HMRC are focusing what can be claimed for R&D tax credits and are focusing that on UK-centric spend. So we'll have a look at that a bit more later. The process has actually changed as to how you make an R&D tax credit claims. Any new entrants for R&D tax credits need to make an advance notification to HMRC, and they need to do that within 6 months of their year end. There's no requirement for those that have had a claim in the last 3 years. Also, any claim must be submitted with an additional information form. These requirements have been implemented to tackle abuse within the system and to increase the regulatory requirements there. To dovetail in with the tackle of abuse, we're seeing a higher risk of inquiry. So previously only 1% of claims were actually inquired into. That's now up to at least 20%. We're seeing that these inquiries are quite onerous and a lot of questions are being asked. So we're asking our clients that make claims to make sure that you spend more time up front to make sure that we're answering those standard questions that we're seeing. In the future, we've got changes that are coming, which is the merged scheme, which will be a single scheme for SMEs and large corporates. There will also be an R&D intensive scheme for those that are loss-making SMEs. And then I've had a quick look at the policies that are going to be coming in if there was a change in government. We can see that the Conservatives are going to continue to support R&D tax credits. The Labour campaign does mention innovation, doesn't specifically talk about tax credits, but does pledge to support innovation. So it'll be a watch this space there. So let's look at where we are with the R&D tax credit rates. So up to 31st of March, we were with SMEs, we had a 130% enhancement for R&D qualifying spend. And an SME is those that have up to 500 employees, less than €100 million turnover and less than 86 million gross assets. And if you were a loss-making company, you were able to surrender your R&D tax relief for an actual cash credit, which used to be up to 14.5%. And you can see there on the slide that if you're a profit company, that meant that you got a 24.7 effective tax saving. And if you're a loss-making company, that was up to 33 and a bit percent. You can see that there was a dramatic drop for expenditure incurred after 1st of April 2023, which meant that the R&D enhancement dropped to 86%. The R&D tax credit was reduced to just 10%. So that meant for a profitable company, the tax saving was 21.5% of your spend. That's also triggered by the fact that the tax rate is 25%. So actually that 86% is a bit more valuable than the 130% for profitable companies. But you can see that there was a disproportionate reduction in the saving for a loss-making company due to that reduction in the tax credit to just 18.6%. So after a bit of lobbying from the tax professionals and also R&D companies, HMRC have created a loss-making R&D intensive scheme, which means that if you qualify, then the R&D tax credit amount is back up to the 14.5%, which means you get an effective tax saving at 27%. That definition of loss-making R&D intensive is where your R&D expenditure is at least 40% of your total expenditure. The calculations are quite complex, but it should mean that those that are pure R&D companies are able to still make use of the scheme. The winners in the changes were actually those large companies that fall within the RDEC scheme or perhaps projects that are grant funded, where their RDEC rate was increased from 13% to 20%. The way that the RDEC works is that the R&D expenditure credit is actually taxed, so therefore the effective tax saving for a profitable company is 10.5% and is increased to 15% for a profitable company after April 2023. These rate changes are actually just based on when your spend was actually incurred, so you do need to split your spend pre and post that date. So what else has changed? Well, on the next slide, we'll be looking at the qualifying expenditure. So one of the sort of most important changes is actually HMRC are focusing their spend on UK-centric spend. So this will cover your UK, needs to be for UK subcontractors or UK externally provided workers. So those are those agents that might work for you. So the EPWs need to be subject to UK PAYE. This doesn't impact if you're using overseas employees. It's just for those sort of third parties that are included in your claim. There's very limited exceptions for any overseas spend. That might include something where it's wholly and unreasonably to undertake the R&D in the UK. So that might be due to geographical constraints or regulatory constraints, but it's a very small exception. These rules were originally due to come in for accounting periods beginning on or after 1st of April 2023, but they were pushed back a year to 1st of April 2024. So we haven't seen the full effect of these changes yet. The other thing that's changed is the advance notification. As I mentioned before, this is sort of to tackle abuse in the system. So if you are making your first claim for R&D tax credits, then you must notify HMRC within 6 months of the period end. Previously, you had a 2-year window to make a claim, which is your corporation tax amendment window. So that significantly reduced the opportunity for when you can make a claim. So if you've got a claim, make sure you're talking to your advisor early. There's no requirement to do the advance notification if you've made a claim in the last 3 years. The biggest sort of documentation change is actually the introduction of this additional information form, which must be submitted prior to the submission of your corporation tax return, and it's compulsory. So it prescribes what information you must include for each project. So a bit like your project descriptions, actually documenting how you're making an advance in science and technology. And it specifies how many projects you must include, and the spread must be broken down by project. We found that at KR, that our reports that we prepare for R&D tax credit claims covers most of these requirements, but one of the key changes is that you actually have to name a responsible officer and who your R&D agent is. So let's have a look at the merge scheme. So the merge scheme has been announced. It hasn't gone through Parliament yet, but it's going to be a single scheme for no matter what size you are, SME and RDEC. And it's going to be modelled on the existing RDEC scheme, which means you'll get a 20% expenditure credit and the effective tax saving will be 15%. There's going to be a new definition of subcontracting, which is a bit of a welcome definition there for us. So it means that the decision maker will be able to make a claim. Those of you who are already in the RDEC scheme, you might be able to now include some of your subcontractor costs within your R&D claim, which is great. The existing PAYE NI cap within the RDEC rules is quite restrictive. However, it's going to be now modelled on the more generous SME scheme, which means you should be able to get a higher credit back from HMRC. The good thing with the new model is that it actually aids the Pillar 2 considerations where Mohammed was talking about the minimum top-up tax, because we can see that sometimes the R&D SME scheme will reduce the effective tax rate in the UK to below 15%. Whereas under this model, the credit actually reduces the tax payable that you need to pay to HMRC and not the tax that is due. So this single scheme, I don't necessarily see it as a simplification, because the merge scheme is disproportionate for those loss-making R&D companies. So there is a second scheme for loss-making R&D intensive companies, and that will continue to model on the SME scheme with that effective tax saving of 27%. That's most of the things that change on R&D. I just think it'd be good to contact us if you want to know how these changes are going to be impacting you, and we're happy to work with you to make sure you're meeting all of the new requirements.